Vice President Zlatkin at Coinbase said that the crypto wash sale rule is coming. And I've said this before. I believe the wash sale rule is a tax on stupid. The Vice President of Tax at Coinbase, Larry Zlatkin, recently testified at the House Ways and Means Committee with a series of proposals he felt needed to be done to improve the tax situation related to cryptocurrencies and digital assets. I'd like to weigh in on a couple of those, if I may. He felt that we shouldn't have to report stablecoins on a 1099 DA. He felt that this was an invasion of privacy, and that as we move towards a society where more and more things are paid with a stable coin rather than currency, that the reporting of every single transaction becomes really burdensome and somewhat intrusive into privacy. These are all great points. I would highlight one thing that I am aware of people who make quite a good living scalping times when a stable coin has broken the dollar. Whether it goes higher or lower, they throw millions of dollars at those slight differences and they scrape it. And stable coins are not 100% stable. They vibrate. And these people make a lot of money off the vibration. And under US tax law, none of that profit making would be reported under US law, even though in other countries that would be considered highly profitable and would be taxed. So interesting loophole that's being created. Larry Zlatkin said that the 1099 DA reporting creates too much useless data. Yes, it does. The 1099 DA, as we've talked about numerous times, generates an abundance of data that serves IRS purposes, but it generates an excessive amount of information that ultimately is confusing, misleading, and to some degree terrifying to the US taxpayer. I think the government needs to reflect on what they genuinely need and minimize it. One of the things that Larry Zlatkin argued, and many have, is that small transactions should not be taxed under a de minimis exemption. And Senator Loomis has put this into her Digital Asset Tax Act bill as well. In her proposal, individual transactions that made less than $300, I believe, in profit, or in a year, aggregate of all these, no more than $5,000 in profits, that there shouldn't be any tax on those gains. Well, that sounds nice, but I think in reality, it works out very poorly. Here's why. In order to be able to prove that these gains were not in excess of $300, you have still placed the burden on the taxpayer to track every single transaction and manage the capital gains on it. This is the very complication that you're trying to escape. If you don't track all of them, you can't prove that on the ones larger than the de minimis that you actually have handled it correctly. I think it's a false argument that this simplifies the taxpayer's life. A simpler way to do this would be to add in, for the digital assets, a simple exclusion of a certain amount, say $5,000, which has been thrown around, that you just subtract $5,000 off your net digital asset capital gains. Think of it as equivalent to how people did home deductions, business use of a home. Initially, they had to prove what the square footage was, how much electricity was, blah, 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 blah. It is burdensome, and most taxpayers were terrified and had audit experiences. Eventually, they came up with a safe harbor, which basically gave effectively a $1,500 de minimis write-off on home expenses. I think that's exactly the better approach for doing this rather than trying to avoid tracking. Interesting. Mining and staking rewards should be taxed when sold. This is a big discussion, and this is also the topic of some recent tax court cases and cases that are still in process at the federal level. When should mining and staking be taxed? The IRS has taken the position in 2023 that they're all taxed in the fair market value in US dollars when they are received. Problem is, rewards oftentimes have an inflated or not an accurate value, and the person has not really created a gain. One tax court has made a distinction between the person actually doing the mining themselves, which is a miner, versus participating in, say, a mining pool or a staking pool where a custodian is handling the distribution of the rewards. One tax court made a distinction between these two, and because of that, it didn't qualify for the self-created property exclusion. So interesting. Vice President Zlatkin at Coinbase said that the crypto wash sale rule is coming. Wash sale rule is basically if you recognize a loss, you tax harvest the loss, but then you rebuy that asset back within 30 days before or after the sale transaction, then you're deprived of claiming that loss. All right. And that can be really painful if you've had a big loss, but you believed in the asset. It's robbing Peter to pay Paul. There's no real gain to the IRS to deprive that. Once that happens to a person and they see that in their 1099, they never do it again. And the way stock investors handle this is that they do transactions on multiple brokerages. Let's say they think ABC stock that they bought before has gone way down. They're going to recognize the loss. Well, they sell that on their Fidelity brokerage, but then over on Vanguard, they're rebuying it at the same time. The two 1099s he's getting, neither of them reveal that there's been an actual wash sale transaction. And the only way the IRS knows about this is when it happens on the same exchange and the exchange reports it as a wash sale. So you learn pretty quickly to use multiple brokerages. And for the crypto trader, this is even easier. So you bought it on Binance, you sell it on Kraken, there's no wash sale reported. Would you manually report that? Hey, nobody's going to volunteer that information. IRS can't figure it out on their own. I think it's just a tax on being stupid. And I think the tax code should be smarter than taxing stupid. All right. Brokers and taxpayers need time before wash sale rules start. Yes, I think if Congress decides they got to implement a wash sale rule, it should not be retroactive. It should be effective the following year. And the best solution is no wash sale rule at all. In fact, I think the wash sale rule on stocks should be done away with. So